What's up, guys? So I'm gonna go over trend lines. You obviously watched the other lesson on trend lines, but I'm just gonna show you a little bit of a close-up of exactly how you can draw your trend lines. Besides the outer and inner trend lines, for example, this like this would be your outer trend line, and then from point two, from the point two over here to this would be your inner trend line. Okay. Now, besides that, for example, CHF JPY. Now, I do have a long bias on this P. Okay, I don't quite see us coming down to this trend line. I'm looking for a buy in this area, but I do see maybe a pullback. But besides that, looking at this trend line, if we were to take our fibs out and place it from body to body, we can see that this is basically almost 100% retrace. Actually, I think it's 88.6. Let me just see. Yeah, it's literally 88.6, the last of the last retraces before it's invalid, right? So let's just take that off quickly. So there's another example. I think it's Euro USD. Was it this one? From here. I think this was a 61.8 on the second bounce. Yeah, 61.8 TP2. Okay. Let me go back to CHF JPY quickly. So looking at the first touch, second touch, right? Now let's just say the price did come down a bit further on this pair and it didn't come down till here. Or it comes down to, let's say, we mark an area. Let's say it just comes down to there. Okay? Or something like that. There, that last resistance area before it was broken. Right? So that candle basically broke out. So I'm going to zoom in over here to point 2. Now, you see this 2 weeks over here. Now, basically, point 2, that's basically like your first touch. Okay. Now, it's a pity. I'm going to look for a pair with a wick is short on the other end. So let's just say we zoom out now. You do this first, right? Body to body. So then you take it from this body, right, to that body, something like that, right? If you're doing body to body, you're going to draw it like that. Or from this week, you draw it like that. This week like that. So my point is this: play around with your point 2 based on first week, second week, body. Okay. So let's say you start in the body and price moves below, then you move to second week. Price is still coming down, then you move to last week. Then you know, okay, cool. If it breaks this, we're then gonna wait for what? We wait for the price to go from where it is here. We wait for it to come down, come back up, retest, fall. Okay. So let's take that away. Let me find a pair where gold. Let's find a pair quickly. Same with, okay, so here with gold. Okay. Point 1, top of the week. Point 2, first point 2 would either be there, right? Well, let's say we started there on the body. You would maybe think, oh, we hit this level, place a sell. Nope. You don't just go in on a sell based on where it's touching. Also, if you look at that, that looks like a 38.2. Just a slightly higher. So you wouldn't just go in on a sell. Remember, everything works on confirmation. If you drop down to a lower time frame, there was no confirmation to sell that pair. So once it breaks that, you then move it up. See? So I'm taking it from the body to that week. It still broke through. Then you move it there. This is the last point or the last section you can add point 2. There's no more weeks to go on or for or no body. So you have the first point, the second point, the third point. Okay? So we are there now. So now we're waiting for what? A retest. How would you work this out? We'd look at a level of support. So we'd look at, okay, let's box up this area here where price is sitting currently like that. Okay, it was support. So if it comes down, what pattern will we have? We'll have a right, you have inverse head and shoulders opportunity. On top of that, you have more confluence because you're taking your firm from A to B. Look how nice the 61.8 falls in that level. So what I normally do is I take my price label, I'll put it down like that, and I would look to take it off. Sorry. So I would round this off to 14000, right, like that. So somewhere in that area, I would look for. So now you have confluence. You have a retest of a broken trend line. You have inverse head and shoulders, ABCD pattern playing out with the 61.8, retesting a previous support level. Okay. Anyway, I'm going off topic here. I want to go back to. We go to CHF JPY. I'm going to show you an example over here. I'm going to go slightly back in time on the daily. Okay, so initially we had 0.1, 0.2, right? 0.2 at the second spot, 0.3. So you see body, first week, second week. Guys, while I'm moving this, I want you to focus on 0.2. So week, body. There's always 3 points you can play around with your trend line. So if you base it on this first week and not the second week of the body, so basically between the body and between that first week is where we had perfect confluence. So now, when you see this red candle, so let's just do replay bar, take that away. Okay. So in this area over here, we now want to wait for confluence. We want to see what's going to happen in here that signifies we need to go long. You're first going to drop down by one time frame. You're going to drop down to the 4 hour. Okay. And now everything comes back. Let me just take the replay bar again. Okay, so now it's there. So we can see consolidation. We can see spinning top, spinning top, spinning top. So we know, okay, it wants to go long, but you wait for more. Where's this play button? Here, forward. Cool. You see? Comes down. Boom. Bullish engulfing. Now, look at this 4 hour close. Look at this. Right here. We draw a box rather. Right here. Look at that perfect support level. Support, breaking, retesting, falling. You wouldn't have sold because of a break in a retest. Why? Because it was the third bounce and we know we were waiting for the buy. But now we have price setting there. So what happened next? So let's go forward. Boom. Breaks out of that consolidation area, right? This was support. This was resistance. Now it breaks. So what do we wait for? We wait for the retest. So let's see what happens next 4 hour candle. Boom. See that? Comes down, forms like a spinning top, but literally testing in that area. Now, if we were to go from here, let me just put, this was at 11 o'clock on the 19th of June. Okay, 11 o'clock, 19th of June, 11 o'clock, 19th of June, 11 o'clock, 19th of June, 11 o'clock, 19th of June. 11 o'clock. Here we go. Okay, so here. So now you're on the 1 hour time frame. And again, you have this 1 hour candles forming over here. 1, 2, 3, 4, 5. Resistance, break, retest, go long. Okay, so you enter your long there. If you're on the 4 hour, could have did the same thing, but you wouldn't have had clear entryway because you would have ended up here. That's too late. You would have missed out on 30 to 40 pips. So you see, entering on the 4 hour, you enter late. Then you enter, go slightly back, it pulls back to your entry in any case. And if you look left once again, look at this area here. Basically came down to almost retest that area, but we got our entry over there. When the price went up, we moved our stops above our entry, protected our trade, and rode it up for how much pips? Look, Take out your long position tool. Entry was there. Sorry, that's not the long position tool. That's the short. Here's the long. So long, enter there. Stops below the last week. So a 16 pip stop loss. Taking it up on the daily. Looking for the high. Looking left. Always looking left. Look to the left. Where was the last resistance area? Here. Boom. So we would have got out, let's say, there. Just to be safe, get out over there. 16 pips for a 146 pip take profit. No drawdown, pure profits all the way up, literally to the T. So, guys, use your trend lines correctly. Like I said in the previous video, use everything you've been taught and just focus on what you see. Trade what you see, not what your heart feels, not what your bank account needs, not what you want. You need to focus on what you see on the charts, grasp the concept. Look, spinning tops. Spinning tops are what? Reversal sign candles. Look at they're all sitting on the support level. You just needed to scale down to lower time frames, zoom in and see, okay, boom, that was my entry chance. Enter. Why? Because the risk was only 16 pips. So if you had $1,000 account and you were willing to risk, let's say $200 because the trade was so beautiful, you could have doubled your account with a small risk. You could have risked 15% to gain 100% in less than 2 days. And that's just on a pair. I don't even really trade CHF, JPY. I can look at any pair and I can show you guys this all day long, but the video is already almost 12 minutes. So I keep it short, keep it sweet. Use this information, go back test with other pairs, and please, guys, just trade what you see, don't trade what you feel. Trade what you see, don't trade what you feel. And I'll say it once more. Trade what you bloody see, don't trade what you damn well feel. I want to make it clear to you guys because not a lot of you understand that. When you understand it, you will make more money. You will make losses, but you'll make less losses, more wins, which means more money. But so many of you are impatient. Impatience is something you need to deal with. I can't help you with that. I can advise you how to control it, and that's by trading what you see, not what you damn feel. It's the last time I'm going to say it, guys. I'll see you in the next video. Peace out.